Okay, so I'm excited to be talking to our guest today. First things first, a round of introductions. Perhaps Dusky, you kick us off, and then we'll jump to our guests.
Awesome. Hi, everyone. I'm Dusky, and I'm the head of marketing at Balance. If I hand over to Sonic.
How's it going? I am Sonic. I am the head of operations over at the Takepile protocol.
And I am John. Pleasure to be speaking with you today. I'm the head of marketing at Takepile. I guess I'll quickly just go into my background, but I've been with Takepile now. I think we're on month 8 from the inception of kind of the core team. Spent time on numerous projects prior to Takepile, but in real life, I ran most of the U.S. marketing for a Fortune 1000 beverage company. Really excited to be partnering with Balance, obviously, and see where we can go with Takepile.
Okay, so lost you a little bit there in the middle, but I think what you're saying is you used to work for a Fortune 1000 company. Just to expand on that a bit again for me.
I was the head of marketing for most of the U.S. efforts within that global beverage organization, and so at the same time, I was kind of part-time in crypto, working on a few teams, consulting, that kind of thing. And then,
so let's talk a little bit more about Takepile. So we've mentioned the name a couple of times. Sonic, if you could, and I mean as reductively as you can. So if you could kind of boilerplate it for us, what is Takepile?
Sure. So Takepile is a decentralized perpetual exchange. We'll be launching on Fantom. So basically, some of the key differences about Takepile is we have a new liquidity system. It is called a pile liquidity system. So typically, you have your liquidity pools. So you have 2 tokens and an LP. With Takepile, with a pile, you are only depositing one asset, and then it mints a pile token version of that asset. And then you're trading with pile tokens. You're opening positions, you're being paid your profits in these pile tokens. And so a pile token is essentially you're trading with an LP token. And the difference here is that basically means that we can guarantee solvency for all users. And solvency is very much kind of a, how to put this, it's maybe holding back the whole decentralized perpetual exchange genre, if you will.
Okay, let's put a pause on there for a sec. So we've jumped straight into piles, which is fine, and we'll definitely get to that. But let's come back to that original kind of core question, just to pick that apart a little bit more, with the assumption that some of this might need fleshing out. So it's a DEX, a decentralized exchange. It's a decentralized perpetual exchange, actually. So I think it would be useful, fruitful even, as then we can get into the real nitty gritty of things. But first of all, a DEX versus a CEX. So decentralized exchange versus a centralized exchange. Obviously, Takepile is going to be a decentralized exchange. Why? Again, it may sound reductive, but just in broad terms, broad sweeping terms, why are there decentralized exchanges and centralized exchanges? And what's the difference? What's the point?
So I think that the difference, in my mind, a little background about myself. I've been a professional trader for 2 to 3 years now. And I've always preferred a decentralized exchange because I think it all kind of ties back to solvency. There's that term, not your keys, not your crypto. So I've always enjoyed the idea of these are my wallets. These are I I have custody over my assets, right? I'm not
Self-custody.
relying on it. Right. I'm not relying on a third party saying, you know what, this is, you know, trust us, it's safe. And then, you know, you can't actually see maybe the balance sheet of assets or what they're actually holding, if they're, you know, loaning it out on like the backside and they're not telling their users or that sort of a thing. So Takepile being decentralized, or rather just continuing with, you know, DEXs as a whole, right? I think that a lot of people are more and more every day, they're drawn to that just because it comes back to, you can trust yourself, maybe you can't exactly fully trust a third party, even if, you know, they have some sort of a guarantee. There's no real way of knowing if that guarantee on a centralized exchange is legitimate, right?
Yeah. I think if I could jump in, there's
Sure.
two things maybe we could bring up here. So the first is you've referenced solvency a few times, and for those listening who have heard the phrase that I think most people probably would have heard is something like the market can remain irrational longer than you can remain solvent. You know, that's a very, very common one brought up in crypto and trading generally. So they may have heard that phrase or other phrases like it, and some people listening may well know exactly what solvency is. But just as a generic way of phrasing it, and correct me if I'm wrong, you know, solvency is essentially the ability of an individual, me, you, a business, an entity, to, you know, be able to pay off its debts, but more importantly, it would be have its assets probably outweigh something like its liabilities, right?
Right.
That would be being solvent, and being insolvent would be if your liabilities outweigh your assets and you aren't capable of bringing them back into balance.
Right.
And to come to your other point, when we're talking about DEXs, I think at least something that maybe you're leaning towards, and again, correct me if I'm wrong, but it might be also just the general spirit of crypto and this kind of, you know, cypherpunk style that it was birthed out of is definitely towards the idea of individualism, the sovereign individual, and this notion of, you know, you said, you know, not your keys, not your wallet, etc. There is undeniably a sense within crypto that it should be about giving back more power to the user as opposed to devolving it to large centralized entities. And so in that sense, I think DEX is much more closely with the spirit of something like Bitcoin, you know, which to this day still remains kind of the flag bearer for the entire space.
Yeah, I'd 100% agree. I think, so I also have a background in cybersecurity. So it's
Sure.
sort of, for me, those all go hand in hand, right? It's a lot of, maybe not, you know, self-preservation. I think that that's probably the wrong term, but like you were saying, right, it's power to the people in a way, right? Fewer kind of hoops to jump through and that sort of a thing. I love the idea that, you know, anyone, of course, in a jurisdiction where it's allowed can, you know, connect to a DEX and trade off of, you know, what they believe, what they feel, and they're able to then hang on to those assets in their own custody. I think that, like you were saying before, also it totally follows the entire ethos of why Bitcoin began in the first place, right? Crypto as a whole started.
Yeah, I think as well, if we kind of keep teasing down this line before we swing back to some specific differences between the decentralized perpetual exchange that you're putting forward with Takepile. Another thing that's worth noting that I just think is an interesting point to consider, and especially given, you know, your credentials as someone who's been trading for a long time, but also has a background in cybersecurity, there is an interesting tension, I think, that comes with just broader adoption. And this is something that crypto continues to kind of tussle with existentially. It's fascinating to watch, but I think we could probably agree on, I don't know if anybody would broadly disagree with this, one of the reasons there's been wider adoption of crypto generally, and therefore just more people in this space, is because of centralized exchanges, especially in the last half decade, I would say, particularly, with entities like Binance, for example, who in many ways, you're directly in competition with, or will be directly in competition with. But what that comes with is, again, this kind of existential crisis of to get this more mainstream adoption. A lot of people are now coming into crypto for the first time without having any idea what their keys even are. To you, do you think on balance that centralized exchanges have been a greater evil than they have been a good? Or do you think the adoption to some degree helps to balance out some of those problems with self-custody?
I think that's a little bit of a tricky one. Because I think on the one hand, it's brought it to a huge audience, right? Like crypto has become kind of a household thing. It's on the news all the time, whether they're saying good things or bad things, or
what was the
speaking maybe
what was the advertisement
opinions
at the Super Bowl? Fortune
Yeah.
favors the bold, with the Matt Damon, which South Park have now skewered relentlessly.
Right.
What company was that? Was that FTX?
I think it was FTX. I know Coinbase had their.
Or was it crypto.com? It might have been crypto.com.
Yeah. Maybe it was.
Yeah. Okay, sorry. Yeah.
No, you're good. I mean, crypto.com now owns, I think it's the Lakers stadium. In like one of the biggest real estate deals in history. I mean, I think that all of that is, in my mind, it kind of brings people towards this idea of, okay, maybe I get started with a centralized exchange, and then I start thinking about, oh, actually, you know what? Maybe there are issues with these centralized exchanges. So what else is there, right? And so that kind of carries them down this path towards understanding, or at least researching, decentralized exchanges, or kind of the original ethos of Bitcoin and crypto as a whole. And I think that, sorry, maybe I'm going a little bit off the path here.
Wherever you need to. We're all good.
The original kind of thought was, are centralized exchanges maybe a necessary, not evil, but
does the good outweigh the bad,
Right. I think that in a way, yes. But obviously, I think my hope is that maybe it has caused more people to start to actually look into decentralization and what that can mean for them and for their kind of personal freedom from getting away from these types of institutions, if that makes sense.
Yeah, I think it does. I think politically as well, off the back of, it wasn't that long ago we had Occupy Wall Street. It feels like it was a very long time ago because of the pace at which the world moves now. But, one of the fundamental principles that one of the fundamental angsts or anxieties that clearly was prevalent in that movement was the perception, I would argue personally, probably fairly, that these financial middlemen who'd been trusted with your money weren't playing fair or nice or sensibly with your money. That was sort of the conclusion, and that as a result of that, the economy was at the mercy of people taking out huge amounts of leveraged gambles on just ordinary people's lives. That was the suggestion of that movement anyway. So I think a lot of that, the problem that was presented was the idea that there was a centralized issue. The issue was that everything was centralized, that there was kind of an inherent corruption that came with institutions, and that these financial institutions in particular had proven repeatedly that they were, to some degree, corrupted by the pursuit of wealth. So I think you're right in that a lot of people, I still think, if they could live in a world where they ran their own bank, I think a lot of them might. And that is kind of one of the interesting missions that DeFi has found itself on. And if we come back to Takepile, an interesting place for us to segue into here is the idea of KYC. Do you want to just briefly explain what KYC is?
Sure. So KYC, particularly on you know, if you go to register on, say,
Binance, right?
Binance,
Or
right?
FTX.
Or FTX, or even, you know, if you're trading stocks, like in a traditional way, even if you're trading your own stocks on a site like, say, E-Trade or eToro or Robinhood, that sort of a thing, you have to have, or you have to go through the KYC process, which is know your customer. You have to have your identity tied to these accounts. It's like a, I think it started as like a fraud prevention thing, I'm sure, if I'm remembering correctly,
I think
which,
you're right. Yeah.
sure, that makes sense. But then you go to a more decentralized world, or I guess a decentralized area, right? Like crypto. And
Mm.
I personally feel like KYC that's another instance, sort of like these centralized exchanges, that sort of, it goes against what it was supposed to be, what that sort of initial thing was. You know, there's no reason for, say, you or me to know each other's actual identity in order for us to trade with each other. You know, me send you a transaction, I don't need to know your identity, because it's about the transaction itself, in my
Yeah.
opinion, right?
And Takepile doesn't require KYC as a DEX, as a decentralized exchange.
Correct.
Yeah. It's interesting watching as well, you know, initially know your customer KYC, the regulations were only proposed for and originally applied to major financial institutions, but that really has expanded out quite rapidly since then. I mean, now there are non-finance industries that use it, virtual asset dealers, fintech in particular, and there are some non-profit organizations as well now that have to use KYC. So it has grown quite significantly beyond its original premise.
Yeah, definitely.
Which is just interesting to be, you know, as a point of note. Again, with lots of these things that originally have a specific intention, they tend to become a bit more bloated as a result of being, you know, perpetrated or promulgated through a centralized institution that has an interest in just broadening its own kind of knowledge set about citizens, for example.
Right.
And as you mentioned, decentralized systems, for example, DEXs, for example, Takepile. Another one, and a good example of another DEX would be Uniswap, for example, or is it GMX as well? Or, you know, these are other places where you're not going to be required to do KYC. Although, you know, there's an argument to be made that some of these bigger crypto players eventually may be forced to. I don't really know how that goes legally in the States, for example. But let's stick with Takepile and get into more detail there. So in your slide deck, which I've had a thorough look through, and in your white paper, you know, there are a couple of things that you suggest that Takepile will do better than other DEXs. So we set the stage there contextually. So we've spoken about DEXs broadly, we've spoken about KYC, you know, why uniquely DEXs exist compared to CEXs. You know, one of the things you've mentioned is that this idea of DEXs reaching a mass market audience. Do you want to talk a bit more about that and why you think that's a particular kind of niche area that you're focused on?
Sure. You know, I think that all of us on the Takepile team, we kind of share that same idea of, let's do our best to focus on what crypto is supposed to be about, right? So like already we've talked about like KYC, and then we mentioned solvency, and we mentioned
self-custody.
kind of, yeah, self-custody. And I think that another piece of that is making sure that users on a platform have as many options as they can have. So we really wanted to build a platform that somebody can come to it and they can go, you know what, I think I want to, you know, make a high leverage trade, and typically high leverage is only found on centralized exchanges. So then you get someone who's saying, I really wish that I could make these high leverage trades, but I don't want to go through a KYC process on an exchange. I don't want to be restricted by any of their maybe criteria that I have to meet in order to make these trades. So we wanted to bring a feature set of some of our competitors, other decentralized perpetual exchanges, like you mentioned, GMX. And then we also wanted to bring some of the DeFi passive earning tools that are offered on a Uniswap, like staking and that sort of a thing. And that kind of combination of, okay, if we're offering all of these tools, then hopefully we can attract somebody who just wants a way to deposit some stables and passively earn on that. And then that allows traders who are looking for a decentralized place to use as little or as much leverage as they want. So that's kind of been our focus, is keeping it decentralized, one, lot of options, and then making it competitive with not only perpetual dexes, but your standard dex with plenty of staking and passive earning opportunities.
One of the things that I know you're putting forward as being a key differentiation point, and you jumped straight to it earlier, which is totally understandable, and I want to kind of circle back to it now,
Sure.
is the pile liquidity system. So if we take dexes at large, what is the issue you're trying to solve with piles?
So essentially, say that you have a decentralized perpetual exchange, you have a ton of volume. Maybe there's some day where everybody's looking at the chart and everyone says, you know what, today's the day that I'm going to long Bitcoin, and this is going to be, a really great play. Whatever, you have a huge imbalance of users that are now longing Bitcoin. Say they all open around the same time, and now they're all wanting to close around the same time. If you are using a liquidity pool model, then that pool could get drained, and then you could have users that are left that can't withdraw funds. Their positions aren't liquid, and they're stuck essentially, right? And we've seen that happen quite a few times over the last few months, in particular when things have been a bit more volatile than maybe people were expecting. So
Yeah.
this pile liquidity system, so as I mentioned earlier, which I did jump into because I'm very excited about it.
Absolutely.
With a liquidity pool, right, you have two assets. Say it's a pool with, I don't know, Fantom and wrapped Bitcoin, right? So in order to trade on that liquidity pool, you have to essentially deposit either Fantom or wrapped Bitcoin, and then you're getting the other token, right? So if I'm spending Fantom to buy Bitcoin, then Bitcoin's coming out of the pool, that sort of a thing. With Takepile, you are only depositing one asset. So in the case of our launch, part of our partnership with Balance is we'll be using their stablecoin USDB. So you would deposit USDB into the USDB pile, and then you would receive the pile token version of that, which is pile USDB. So now you're opening and closing your positions with pile USDB. And then when you want to convert that pile USDB back into USDB, all you're doing is just depositing and then burning your pile USDB. So that pile USDB goes out of circulation, and you can pull out your USDB.
In effect, you're redeeming it for your
Exactly.
Yeah.
So that's why we make the comparison to an LP token, right? Because your percentage supply of the pile USDB is equivalent to the amount of the underlying asset in a pile that you can withdraw. So if you're making really good trades and maybe you start at, say, 5% of the pile is what you own when you're depositing your USDB, you make some really good trades. Now you own 6% of all pile USDB in circulation, just, for example's sake. Then when you're going to withdraw, you can withdraw 6% of the USDB that's sitting in that pile. So it's more secure, guarantee solvency, because if you're holding a pile token, then you're always going to have a piece of that pile. So you're always entitled to whatever your equivalent portion of those underlying assets are. And that's not the case with the current perpetual DEXs on the market.
And one of the reasons that's concerning, or one of the reasons that it's an area of focus, is presumably to do with scale as well, and being able to scale that system.
Right. We've done a lot of research, and I think that one of the issues that I see with the current perp DEXs on the market is they can't offer that many assets, right? So then kind of going back to, how can we appeal to a broader audience? And maybe John can jump in here in a minute and kind of give his 2 cents on this as well. I think that what makes Takepile different is because of the pile system, we no longer have a limitation on markets because we have that solvency. The solution to solvency on these other perp DEXs is just deep liquidity, right? They are just trying to build as much liquidity as possible to be able to add one market every couple of months, maybe. I of course don't know the internals of our competitors and what their release schedule is, but we do know that fewer markets means better solvency potential for them. And like I said, with us not having an issue with guaranteeing solvency, that totally opens the doors for us to be able to have as many markets as makes sense for us.
Okay. John?
Yeah, I can jump into, and just kind of from, I guess, more of a marketing and audience focus. We look at like what brings users to the CEX side of trading, and it's the high leverage, the numerous trading pairs, etc. And then we look at the perp DEX side, which, as we've discussed, no KYC, more kind of in the spirit of crypto as a concept. And then we look at, the kind of household name DEXs of, I'll use Spooky Swap, for example, where I think, and Sonic can correct me if I'm wrong on this, but something like 70% of their volume comes from, macro trading on a DEX. So we looked at a lot of the features from each of those that drive users into the platforms, being the leverage, the trading pairs, the decentralized aspect on a DEX, and then what does the perp DEX kind of market right now currently offer. And it's, some of one side, some of another side, and not really cohesively brings, I left out the DeFi, the DeFi suite as well, ability to earn passive income. So that's kind of one of the things that we really wanted to look at was, how can we bring the most of the best to the current market of, perpetual DEXs. And that's kind of what we're doing from an audience standpoint, because at the end of the day, right, if you want to take a look at one of the competitors, there's probably, 5 to 10 markets, let's say, just for, average sake. With the liquidity system, we can scale effectively, to an infinite number of markets and trading pairs that we wish, using our Oracle partners. And it could become very interesting from a community engagement standpoint if we wanted to allow our community down the road to take a vote on what pairs we want to use. We've talked about it with the balance team as well, given that FHM is one of their products and we're a use case of USDB. We can put a vote out to see what their community would like to see within Takepile. So really the options for us are limitless because of that really key system from an audience standpoint.
There's quite a lot to jump into there. So let's do leverage. So, leverage is one of the features you've quoted as being something that people are looking for in DEXs. You guys are offering leverage up to 200x, if I understand everything correctly. And that to some degree is based upon the take token as well. So let's silo these two bits off. First of all, leverage, what's available on Takepile, and to what degree is it 200x, and a little bit about the take token, if we can as well.
Sure. So kind of going back to what John was saying, I don't know if the number is exactly 70%. It's somewhere in the range of 70 to 80% of Spooky Swap's volume is through Bitcoin, Fantom, BNB, Chainlink, like he said, a lot of these macro market tokens. So my suspicion, these people aren't buying on Spooky Swap to hold it. They're day trading it, right? And I think that most people that are trading macro market tokens are day trading. They're not, maybe some of them are trading them to focus on building their stack, that sort of a thing. But I think with day trading, that goes hand in hand with leverage, right? Because someone wants to maximize their profits. So that's where the leverage piece comes in. If we're able to offer these macro market tokens that people are looking to be day trading, maybe they want to hold a position for 30 minutes, maybe they want to hold it for 6, 12, 24 plus hours. That's something that we feel we enable. How we are able to kind of segment off these leverage sections is we'll have piles for each kind of tier of leverage. So we have the USDB pile, which is 1x long and short only. Then it'll be the USDB 10x pile, 25x, 50x, 100x, and 200x piles. So that's kind of another way that we didn't want to, or rather we wanted to kind of make sure everyone was trading on an even playing field where someone can trade 1x versus 200x traders. If they wanted to, they could trade 1x on the USDB 200x pile, but they don't have to, because they also have a pile that's specifically for 1x, or if they're wanting to trade maybe between 2 and 10x, then they have their own ecosystem's not the right term maybe, but they have their own space to be able to do that. And sorry, what was the second part of that question?
Understanding how the take token plays into that, and what is the take token?
Gotcha. So the take token is our utility token. So I just talked about these different piles that we'll have, right? So at the start, we'll have USDB, and then we'll be expanding to Fantom piles with the same kind of segmentation. So what you can do with your take token is you can stake your take on any one of these piles, and then you're entitled to a portion of the fees that are collected by these piles, the trading fees. So say that there's 9 take that's staked on a pile, you stake one of your take tokens, then you're entitled to 10% of all the fees that come through that pile. And so that's another way that we wanted to kind of thank our users essentially for participating in the ecosystem, because when you open a position and then close it, during that period of time, say it was open for an hour, you've earned an amount of take. And then at the same time, if you are depositing into a pile to help boost that liquidity, you can then stake your pile tokens and earn take. So it's our way of incentivizing liquidity and incentivizing transactions on take, and then thanking our users for participating in the ecosystem. We do have a requirement of, say that you want to trade on the USDB 200x pile, then you would need to hold 200 take tokens. And that's just kind of a way to get our users involved and start to kind of look into the utility of take itself. And that's something that's adjustable. So say if the take token were to you know, in the future go massively up in value, then we can shift that so that it's still accessible to more people. Because that's another part of our platform, is we don't want to discriminate against portfolio size. You know, we'd like to be someone that is an accessible platform to everyone that maybe they're just getting into trading and they're trading with 10, 50, $100. But we also want to have enough liquidity that someone who has a larger portfolio and they want to be able to trade with larger position sizes, they're also able to do that.
Another kind of area to touch upon is Forex. So I think that's mentioned as well in your white paper, if I remember correctly. So Forex is foreign exchange. So the idea of trading currencies. Is that something that's included within the suite of features that you're going to make available in Takepile?
So not at launch, to be clear, but it's something that is definitely an option, and it's something that we have fleshed out. We know that we're able to implement it, but it's kind of another one of those situations where we want to make sure that we would be doing it properly, and thinking of sort of every angle around that. But yeah, I mean, Forex is another thing that Takepile could very easily implement, and something that we would like to implement as well.
I'd be very curious, just as kind of an abstract idea, and not necessarily any commitment from you, but you know, Forex as a notion, it gets a little bit weird when it comes to you know, attempts to make decentralized stablecoins, because could you have, I guess, the equivalent of like decentralized Forex, because you could have the equivalent of foreign currencies as decentralized stablecoins being traded against each other. So, you know, a lot of stablecoins that exist now, the vast majority of them, as far as I can tell, are pegged to the dollar. But there are some other stablecoins that do exist that are pegged to the euro. I'm sure there must be one that's pegged to the pound. If it is, then it doesn't, you know, pound sterling. If it is, then it's not particularly popular. But if you created, technically speaking, if there was a Forex feature that traded decentralized stablecoin equivalents of those foreign currencies, would that be Forex or not?
That's an interesting one. I mean, I guess technically in my mind that would still fall under the Forex category. Like, I know China's been talking about it for years, of digitizing the yuan. And the States, I think it was maybe last year, they announced that they were now working on a digital dollar. So I would imagine that in the future, maybe sooner than we kind of think, we'll probably kind of see those sorts of pairs where maybe, you know, the digital yuan or the digital dollar becomes kind of their own entity on blockchains that people are then, you know, Forex trading with, in the same way that they're kind of, you know, trading USDC and USDT versus USDB and, you know, DAI and all these other stables that are out there. It might come a time where, you know, USDB is trading against the Chinese yuan and, or sorry, the digitized yuan, right?
Yeah. And I think this is where it also can become confusing for people, and we're on a massive sidetrack here, but I'm going to let it play out just because this is interesting, right? But so CBDCs, for example, you know, they're all the rage when it comes to buzzwords now. But CBDCs, you know, a central bank digital currency, that's not necessarily just a digital currency. And I think people get quite confused about that sometimes, because digital currencies to some extent exist now already, right? So, for example, most people who pay for things now, they don't pay for it using analog money, right? They're not using paper. It won't be paper, but then they're not using, it would be called paper money, I guess. You know, people aren't carrying dollar bills or pound sterling notes.
Cash would be the term.
Cash. Yeah, cash is a great way. Yeah, let's go with cash.
Yeah.
You know, but people aren't carrying cash in the same way they used to. And that's been accelerated by COVID for sure, because a lot of people push to phase out cash there, at least in part because of that. So a lot of people are using contactless payments. And the vast majority of people's bank accounts, you know, there is not an account somewhere that has that in cash form in it, right? It's not like in Harry Potter where you go to Gringotts and you open your vault and there's all of your money. In fact, all of this is digitized. These are all numbers somewhere on a digital spreadsheet, for lack of specifics. It's some equivalent to that. CBDCs are interesting because they will be a departure even from the type of quote unquote digital money we have now, because that will be programmable. You know, that is the big difference here. So for example, a CBDC could be set up to influence or stymie certain consumer behaviors. So a good example that I suspect will become reality is if a government wants to push through green policy, then they could very well, for example, make it so there's only so much of the CBDC that you hold in your centralized bank account that you can spend, for example, on fossil fuels. That's a very real outcome over the next 10 to 15 years. So CBDCs, like the one, for example, that China keeps floating, they will give a phenomenal amount of power to governments to further kind of influence directly what people buy or sell. And certainly, anyway, the flow of money, they will be able to far more directly input that. And you can see the incentive there, you know, as a government, if you want policy to succeed, then being able to kind of influence what people spend money on would make a massive difference. But CBDCs certainly are quite different to what people's current perception of digital money is. If anything, it's more like, they're more like vouchers in some ways than anything else, I would argue. But you might disagree with me on that.
I totally agree. I mean, I could talk about this for a long time. I think that, you know, again, that's another reason why I think crypto and decentralization in general is so important, because if you do have your assets sitting in a wallet, then I feel like it's sort of a case of, well, if I want to spend it on, you know, fast food 5 days a week, I don't feel like an entity should be able to tell me, you know, sorry, you've already been to McDonald's once this week, you can't get your chicken nuggets tomorrow, right? Like,
right.
I think that it falls into that territory, and I'm not a fan of that sort of a situation.
No, and we're several layers away from that. I'm just making a series of relatively reasonable assumptions. If CBDCs are going to be useful in any way to governments, it will be because they're able to directly influence patterns of behavior. And even if we take the McDonald's example, if there's a bill that gets passed which suggests that meat eating should be curtailed because of its perceived impact on the environment, for example, I don't think the data is there yet, to be honest, to suggest that that would be viable as a course of action to reduce carbon emission. I don't think the data is there. And I think it's you'd have to do a multivariate analysis on that to see the myriad ways that would impact other things. But let's say that someone passes that through as policy. With CBDCs, there's a very real world where someone says this is the cap on the amount of meat you buy per month. And if you try and spend that CBDC on that after a certain threshold, it will not be accepted at any till anywhere. That's entirely possible. CBDCs are, I think, it's funny. I think people often suggest that, for example, centralized stablecoins and decentralized stablecoins, so USDB, for example, versus something like USDC, they are the polar opposites of each other. If anything, USDB is the polar opposite of something like a CBDC. That is the real kind of that's the final boss battle, I think.
Yeah, for sure. If I can just chime in there, I think.
Yeah, please do.
I think exactly the final boss battle is for sure the CBDCs. If you can kind of control how people spend their money down the line, I think that's a dark path. But what I would say, on the other hand, a CBDC versus, I guess, the current fiat system is, because it's all on chain, you'll be able to expose how much leverage a bank is holding, how much, because everybody will be able to see what a bank's doing with their dollars, because it's not just numbers on the computer anymore.
Only if governments use a blockchain that's accessible to everyone, which I suspect they won't.
Exactly. That is concerning, but at least from the government's perspective, they'll be able to keep an eye on banks. But it's a scary path. So let's hope that we can keep it all decentralized.
I think while I've got you talking, Dusky, we've been through a pretty wide range of different things that Takepile is either doing or is planning to do. And I think that Sonic and John have done a good job of fleshing out many of kind of the core features that they think will differentiate them against competition that we've been through earlier on as well. Which of those things particularly, if any, did Balancer look at and go, this seems like a really good opportunity for a partnership for the usage of USDB?
I think, I guess our financial guys on the team would be the best to answer this. But from my perspective, it was the fact that with us being a smaller stablecoin and not having the depth of liquidity in a sense that another stablecoin had, for us to scale, we can kind of scale with Takepile as they grow. So there's no cap on. So we have a relatively elastic way in which we can control our supply, and we can scale relatively quickly. But we didn't need that deep liquidity from the get-go, where we would be, where with other projects we may be putting them at a bit of a risk. Where with Takepile, because of their system, we now can kind of grow our liquidity with them. So from that perspective, it was cool. And on the other side, that we were chatting to multiple.
Dusky, we just lost you there for a sec. I'll see if Dusky chimes back in a moment. What I will do.
Did you get me back? Sorry, guys.
Yeah, we've got you back now. Yeah.
Sorry, load shedding for everybody who's in South Africa. I didn't realize it was 5. Where did you lose me?
You were about to talk about what specifically there was a particular feature set you wanted to explain as being really interesting to you.
Was it so I'd spoken about the scalability?
Yes.
Okay. Yes. So, particularly the fact that their liquidity is controlled, and I think from a risk perspective, a lot of the other projects that we were partnering with, doing perpetual or trying to attempt perpetual trading, etc., that some of the guys in our strategy team who went and actually ran the numbers found Takepile to be a more viable solution. I can't exactly speak for them, and I didn't look at the in-depth. Well, I did look at the spreadsheets, but I don't think I understood everything. But from their risk analysis perspective, Takepile is pretty cool. And then the last thing, which I'll touch on, is Scamwix. We did a little bit of, and maybe this is a touchy subject, but we did a bit of a deep dive into kind of other exchanges when we were looking at doing something similar ourselves. And there's almost not like Sonic said previously, there isn't solvency everywhere. So measures that centralized exchanges and other platforms utilize are scams, whereby Takepile, in a sense, I guess through the Oracle system, you kind of avoid that in a sense, which is nice for the traders from the traders' perspective. Yeah.
Okay. Thanks. So look, I know we're coming up on, we must be coming up on now. Is there anything else, guys, Sonic, John, that you wanted to throw in here that we haven't covered in detail, that you have a burning passion for, that you think we should address before we look to wrap things out? No.
Yeah, I guess I can jump into just to bring it. Sorry,
no,
I was a little slow on the unmute. I just think to bring it kind of home in a nice bow, right? The goal here is for us at least, to bring the largest feature set to the largest number of people in a way that, to put it most simply, it works. We've seen a lot of, really good ideas come to light in the past, and different narratives across the board within DeFi, within different networks. And really for us, the goal is the feature set and the options to bring to not just one audience or another, be it, if you're focused in on DeFi, if you're really a, DeFi heavy person, whether you are a macro trader, if you're a leverage trader, et cetera, all the classifications we can bring to people. And so for us, that really is just the at the core of Takepile, is to bring, obviously we've talked a lot about the liquidity system and the newness of it, or it being novel to our project. But everything is about scaling those options so that there are the opportunities within our ecosystem. And as Takepile continues to grow in the partnership with Balance, and the use case for USDB, it's kind of one of those rising tides raise all ships sort of situations for us. So I guess that's all I would have to say. I'm not sure if Sonic has anything else, or if Dusky wants to throw something in from the Balance perspective, but I would just say that thank you for having us on.
Pleasure. Yeah, appreciate you tying things up in a bow. Sonic?
Yeah, so to kind of jump onto what John was saying there, I think particularly about our partnership with Balance is, I've had the pleasure with speaking with most of the team on and off for a few months, even before I started at Takepile. And the one thing that struck me was they are as passionate as we are as a team of kind of pushing the whole DeFi space forward and focusing on innovation and what are the gaps here and what can we do to make it better, make it more accessible for people, make it stronger as a whole. So that in particular, I'm really excited to see where Balance goes and where Takepile and Balance can go together. And, like John said, I really appreciate the opportunity, and thank you for having us today.
No worries. I think if I give the closing words to you, Dusky.
Awesome. Oh, all the pressure. Yeah, thank you guys for being here. We are really excited for the partnership ahead. We got a lot of things on our table, and I must say, this is, don't crucify me, but this may be my favorite, and I'm really keen to see how this grows and what we can do in the space. Yeah, hopefully there'll be a new name in the Perpdex game next time this year. So yeah.
Okay, in which case that rounds us out. Thanks for tuning in, guys. Thanks to Dusky, to Sonic, to John, and we'll see you on the next one.